Welcome to The Deal, our quarterly outlook on the European M&A markets. The picture for the second half is complicated. Political uncertainty and trade conflicts have weighed heavily on the economy and sapped investor confidence for mega deals or those valued at over 10 billion sterling or more. The European Central Bank is now looking at interest rates remaining at record lows well into 2020, off the back of what it described as lingering manufacturing softness. That said, conversely, we're seeing small and mid-sized deal volumes holding up really well. 2019 will be a strong year for M&A, but the bulk of the activity will all be in the 50 to 500 million sterling mid-market. At the mega deal end of the market, European M&A volumes are down 40% on last year. Add to that increased regulatory hurdles for large deals this year, with a number of landmark transactions being blocked in the first half, and cross-border M&A is at its lowest level for 20 years. European dealmakers could be forgiven for thinking that now was a good time to have a long summer break. But whilst there are some headwinds, this isn't the whole picture by a long way. In the mid-market, with interest rates low and debt finance readily available, investors' cash continues to pour into private equity funds, where there's now a record $2.5 trillion of committed but undeployed capital, looking for deal opportunities and higher returns. As a result, private equity-backed buyouts accounted for 20% of all European M&A in the first half of the year, the highest level since 2007, and the prices being paid remain at close to record multiples of profit. In technology, healthcare and financial services in particular, activity is strong. In tech, the UK is seen as a world leader. UK artificial intelligence startups have raised as much equity as in France, Germany and the rest of Europe combined. Total venture capital investment in UK tech has now topped £6 billion, more than any other European country, and the tech sector accounted for a record 16% of all European M&A in the first 6 months of this year. More broadly, the UK remains the strongest European buyout environment in the 50 to 500 million pounds mid-market, where deal volumes in the first half are only slightly down on last year. So what do we predict for the second half of 2019? M&A will remain strategically important to a wide range of companies given low organic European growth rates, but trade tariffs and broader uncertainty will reduce mega deal activity. Mid-market activity will remain strong, particularly in technology, healthcare and financial services, with ongoing keen interest from strongly capitalised private equity buyers, particularly in high-growth businesses. Finally, we see accelerating outbound M&A activity into strong US markets. Thank you for watching. I look forward to speaking to you after the summer.